What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we are going to do an update on PayPal stock because there was some big news that came out today that hopefully will be a catalyst to turn this stock around. I've owned this stock for a while now, probably at least a couple months, and the stock has been disappointing because it hasn't done anything. So it's down a 36% in the last year, and it's down 76% in the last 5 years. But basically, the stock has been flat now for almost 4 years. It's basically been flat at around $70 a share, let's say, right? I mean, there's a little bit of fluctuations. I guess it's been between 100 to 50, there's a little bit of up and down there, but the fact that it's $57 and it hasn't really done anything. So first, let's get to the news because that's the big thing here that I think can actually push the stock forward, which is I think I've been saying this for months is like this is what they need. This is kind of the only thing they can count on to actually turn the company around because of the situation they're in where they pretty much have maxed out their a number of users, 438 million people, right? I mean, that's what is it? That's what is that? 12, 13%, 12% of the entire population in the whole world. So I mean, they already have a lot of people on the platform. It's not like they need more. I mean, that is a way to grow the business, but at this point, it doesn't look realistic. And especially the main problem the last at least 5 to 7 years is the competition. The Google Pay, the Apple Pay, they own Venmo. Luckily, they actually have PayPal and Venmo. But Cash App and Zelle and all these other things, it's a problem because most people, I think, adopted onto those new platforms. Like I use Apple Pay all the time. Google Pay sometimes, I'll use Venmo and PayPal every once in a while. I would say I use PayPal at least once, a couple times a week, maybe. But I'm using Apple Pay almost every day. So there's that. And the main problem here is their users is flat, which that's again, it's a problem and it's also not a problem because they have so many people. What else do you expect? But the problem paired with that is that the transactions are going down again because of the competition. So people have PayPal accounts, but they're not using it as much because of all these other platforms and competitors, you could call them, that you could send money through. So that's the problem. Now, with that being said, their revenue is still up, their net income is still up, so that's good. Supposedly, there's little bits of news that comes out that they're working on monetizing Venmo more, or they're integrating PayPal into ChatGPT. That's supposed to be a catalyst. It's all been stuff that has not moved the stock enough yet, and that's been the problem. But the fact that the stock hasn't moved in almost 4 years, meanwhile their net income was 2 billion in the $2 billion range back then, and now we're at about five, so it's more than doubled. The stock should be at around the $100 mark. It shouldn't be close to the $50 mark. So that's something that's been super frustrating. Free cash flow is just, it's pretty much flat the last 4 years, which again could be tied to the reason behind the stock price being flat. Cash to debt is equal right around $11 billion. They have done a phenomenal job buying back shares though. The last couple of years, they're averaging 5%, buying back 5% of the shares outstanding, which is phenomenal. You go back a couple of years, they had 1.1, 1.2 billion shares. Now they only have 970 million. So that should be helping the stock, right? I mean, that's again, look at EPS is looking good, right? So that's technically helping EPS. So we have that, but it's down to a 9 PE ratio. That's how ridiculously cheap this stock has gotten now. A 9 PE ratio, pretty much saying we're going out of business or this company is so irrelevant it's not worth anything. That's basically what this is priced at. And you look at the forward PE ratio throughout the years, it was a 17 just 2 years ago. Well, you could say a year closer to a year ago, it was 17, and now it's all the way down to a 9 or 10. PEG ratio, I've been looking at this one more so lately, 0.5, which is just, again, ridiculously cheap. Analysts have them they're still growing. It's not, look at, they're growing 5% a year. EPS is supposed to go up to 5.3, 5.7. So why did I click on that? So the numbers are not bad. The growth is actually still there, but it's the same thing that's going on with a couple stocks in the stock market, like Adobe right now, where the stock is either it just keeps downtrending and not going anywhere. Meanwhile, their numbers are getting better. And I think it's really just because of, I mean, PayPal is actually probably a more extreme and realistic scenario it's going through compared to Adobe, because basically all these AI threats, and it's kind of just like thoughts, it's just talks that there's going to be a competitor or AI is going to ruin the business. And Adobe right now, I mean, we'll get into that in another video, but PayPal actually has competition that's been around, and it is actually affecting the business, right? But again, they're growing and they own Venmo and PayPal, two of the most popular apps. So it doesn't mean that Apple and Google Pay are going to push them out of business. It doesn't mean that at all. But it means that to have a substantial catalyst for this stock to go back to $100, it needs to do something like buy out a company. And really, I think this was the best possible thing they could have picked. I think the technology and the sector and what this company does that they purchased, I think they could not have picked a better type of technology to bet on, because you read here, this is the exact type of thing that they needed. PayPal has acquired Cymbio, platform that helps brands sell agentic services, including Microsoft Copilot and Perplexity. Okay. So, and I mean, considering PayPal is already working with ChatGPT, maybe it probably should be on ChatGPT, I would think. But from the way it sounds, the way I'm interpreting this is these AI platforms like Perplexity and Copilot, this Cymbio now is going to help brands sell on there or show up on there, or however they're going to do. I don't know if they're going to do advertisements or just, when I mean, because right now, when I search something into ChatGPT or Gemini, it'll bring up a list of restaurants, a list of stores, a list of products, whatever I'm searching for. And it's, especially for Gemini, it's probably just pretty much doing a Google search results type of thing. But that's going to be a huge thing for any company, pretty much. Any company selling something, they're going to want to be on these platforms. So this is the perfect bet, in my opinion, that PayPal could have bet on. It's expected the deal is expected to close in first half of 2026, so that's good for the next couple months. And the company's only about 10 years old. They bring a decade of experience in brand integration and multi-channel commerce enablement, including marketplaces. PayPal previously partnered with Cymbio as part of its agentic commerce services, a suite of solutions that allows merchants to attract customers and drive sales in the new era of AI-powered commerce, right? I mean, it's kind of the perfect pick, the perfect timing. Their team and technology will enable Store Sync, one of PayPal's agentic commerce services that make merchant product data discoverable within AI channels. Exactly. That's the best way to sum it up. So I like it a lot. And again, let's hope this is the catalyst that they needed. I believe they purchased this for $3 billion, I want to say. I want to say they paid $3 billion. I think I saw that number earlier. Not sure. But anyways, that's my thoughts on PayPal. This one has been very frustrating and annoying because it's been flat, even though the numbers are getting better. If they were like losing users and the revenue was going down, then that would be more of a problem, but it's not. So I'm still bullish. I still think this stock should like be $100 a share. So that is my analysis for PayPal. Let me know what you guys think down below, and I will see you in the next video.